Hi everyone and welcome back. You're watching Markets at Noon. Asian Paints is the stock in focus. The company delivered a good show. Top line, margins, bottom line, all were above estimates. Let's bring on board Mr. Amit Syngie. He's the MD and CEO of Asian Paints. Mr. Syngie, thank you so much for joining us. And great going. Yet another quarter where Asian Paints has done pretty well. What I want to know is which segments is it that contributed the most to this double-digit volume growth? Was it high end? Was it the low end? What was the product mix like?
Yes, the results have been pretty good when we look at both the top line and the EBITDA growth and the PBT growth which has come in. And I think it is exceptional because the circumstances were pretty tough as you could kind of see around. But we definitely saw some of the demand patterns going up. Overall, I think the good factor has been that the product mix during this quarter two has been pretty good. And today, when we have locked in a high double-digit volume growth, we see that all the segments, whether it is the luxury end or it is the premium end or the economy, all three are growing very, very strongly for us. And that is something which is very heartening for us as we see it. This has come at the backdrop. What we see is that when we see the sales distribution, the T3, T4 cities have really outstripped the demand as far as the paint consumption is concerned. And therefore, what we see is that these cities are consuming even the luxury products in a very, very strong way. So whether it is luxury, premium, or even the economy set of products, I think that is something which has been a phenomenal contribution, which has come in from the T3, T4 cities, even outstripping the growth what we saw at the pre-COVID level. The other thing which has kind of really helped us is that the metros T1 and the T2 cities have started coming back to normalcy. And as we see it in September, they were at about 80-85% of their pre-COVID kind of a scenario. So I think that has also helped us pushing some of our luxury products in the segment, along with the fact that we have a very strong program which is going on upgradation at the lower end, and we look at upgrading people to our starting emulsions which are there, looking at people coming to organized undercoats, and also focusing on the waterproofing category. So I think all this in the product mix across the three layers of luxury, premium, and economy has really helped us in terms of registering this double-digit volume.
Mr. Syngie, in general, I know you mentioned that you're seeing good growth across all segments, but do you think that it's more so perhaps for the lower end products than the higher end? And do you think, that the festive season sort of changes that in any way?
Actually, what we see is that today there are more and more people at the in the T3, T4 cities also embracing luxury products in a very, very big way. And we see that constantly the pie for the luxury end, which is not only for the wall finishes, but also for wood finishes, is going up in a very, very big way. So today what we see is that as we go into future, the luxury pie is definitely going to increase given the consumption which is coming from the smaller town and the cities and the disposable income which is kind of there. And now with the good monsoon, we also see a good agrarian economy picking up there. And therefore, I think we would definitely see an upgrade in terms of products from some of the smaller cities, the urban kind of economies as we see it. What we also see is that during the festive demand, we don't see any kind of a trend that the luxury goes up or the economy sells more. I think it's a balanced portfolio which happens during the festive demand because there are all strata of people across the consumer segmentation who are coming and painting their homes. But what we definitely see is that post Diwali, there is an impetus with respect to the luxury which kind of takes place because people are slightly more relaxed. They don't have a deadline of a festival and they can get into a slightly more longer time frame painting which is there, and they tend to kind of use a lot of decor elements, high-end products as we kind of go into the post-Diwali phase to that extent. But overall, today we don't see that seasonality having a very, very strong up and down with respect to the various segments of luxury, premium, and economy. I think it's an overall balanced sale across the year, what we see.
Okay, Mr. Singhal, in Q2 you saw pent-up demand, Q3 perhaps festive demand. What after that? I mean, what's the rough demand outlook, or is it just too early to gauge that right now?
See, it is very difficult to say because we are still not out of pandemic. We still have more than 70,000 cases which are coming up. There are peaks which start to happen in some cities and some geographies. So I think till the time we have a vaccine which comes out and people are pretty assured that things are absolutely normal, we won't see absolute normal times. But at the same time, what we are seeing is that given the fact that we've seen a peak and people have kind of reconciled to the fact that the fatality rate is very low, plus the recovery rate is extremely high. We see that the paranoia in the customer's mind is now kind of going away. As a result, I think the customer is really stepping out in terms of spending. And I think home as a place has become very, very strong in terms of what people want to kind of decorate and live with, because the connectedness with the home in this phase has really gone up in a very big way. So I think as we keep on looking at future, we are pretty positive that if the current level of new normal kind of stays, I think some of the trends which we are seeing in Q2 should kind of go into Q3 and Q4 as we see it. However, it all, as I said, depends in terms of how COVID fares, and if there is a second wave which comes in, obviously it will have a little bit of a detrimental effect in terms of the overall demand.
Many thanks for joining us today and breaking down the Q2 numbers for our viewers. That's